Hey, what's up guys? Sam here. And I'll be doing the free video for Friday, January 12th, 2024. So excuse the rough voice this week. I seem to have gotten a couple of frogs stuck in there, but we'll make do. So I just finished making the premium video for the folks in the gold room, and I want to distill it down for the good folks here on the YouTubes. So I'm going to distill about a 15-minute video that I made for them. Hopefully my goal is to do it in 5. So let's see how quickly we can do it while giving you the max amount of actionable ideas going into next week. So with the folks in the gold room, what I did was I looked at what we always look at. We looked at the indexes, we looked at the SPY, the QQQ, the IWM. We then branch out, we look at bonds, and we do that via HYG, which is the junk bonds, as well as LQD, which is the investment grade bonds. It's a good idea to look at both. We then looked at the dollar, and we looked at volatility. And I think by looking at a multitude of these products, it gives us a very nice snapshot as to the overall risk appetite of markets in general. So see if you can kind of guess the punchline here. Guess whether the markets were bullish or bearish after we looked at all of those things. The markets were overwhelmingly bullish, right? So there was one little wrinkle that wasn't entirely bullish, and I'll share it with you, but by and large, everything agreed. So one thing that we've developed here in-house is the scoring system for charts, and it's a little bit like cheat codes at this point, because if not cheat codes, and certainly automation and time saving and efficiency, because, and I'll go into this a little bit, so maybe this will be a little over 5 minutes, but I do want you guys on the YouTube to be aware of how this all calculates, right? I don't want to just present it as a black box, because it's actually a lot more interesting if you understand what's in it. So let's start here with the labels, just so that you can kind of check these out as we go along. So notice here on the cues it says max bull, right? Maximum bull. So as good as it gets. Everything's green, everything's maxed out. How do we arrive at a max bull rating? Well, we're going to look at multiple things, right? I think so often folks will have an indicator that measures price. Some folks will have an indicator that measures trend. And then some folks will have an indicator that measures thrust or kind of range momentum. But and when you combine all three of them, price, structure, trend momentum, thrust momentum, you end up with a 360-degree view of a chart. Whereas if you just look at one, you're only getting, a third of the story. So that's what the labels are designed to do. Notice how price here is 20, trend is 10, thrust is 10. This is on purpose. The reason being is the most important thing is going to be price, right? If you could only choose one indicator to look at, are you going to get the most from a trending indicator and not have any price? Probably not, right? If you could only choose one thing, understanding what is the most important thing on any stock chart, it is going to be price. So we weigh that accordingly, and we weigh it twice as much as we do the lower indicators. However, momentum, when you combine it, thrust and trend, it is very, very important because momentum changes before price, right? So if I'm waiting for price to change and I'm waiting for a break of, let's say, the 50 or worse yet the 200, I'm going to be super late to these trades. Whereas if I understand what's happening with momentum, that then helps inform me in terms of what price will do next. So as we go along here, pay attention to the different labels. I'm going to show you a couple of charts. Again, the max score is 40, and max bull is like a perfect rating essentially. So with the cues here, you can see it for yourself. Max bull weekly, max bull daily, max bull hourly. So every time frame basically gets a perfect score. Then we start looking inside this thing and say, okay, well, we're up here at this double top, right? Is it going to hold? Is it not going to hold? What's going to happen next? And anytime that you have a max bull score on anything and you have a squeeze like you do on the QQQ hourly, you just have to go with it, right? You just have to go with it. You trust the signal. Keep in mind the labels have done a deep level calculation for you. So then all you have to say is max bull plus squeeze equals me buy. And that's basically it. So as we go into next week, everything remains really bullish with a focus on the cues. Let me show you a little bit of what was not overly kosher. And I don't think it'll matter all that much, But if anything will matter, it will be this. Because this is the one thing that we found while making the premium video that is not perfectly aligned. So the SPY was good, the Qs are good, bonds were good, dollar was bullish. Bullish meaning the dollar is bearish, therefore it's bullish. VIX was bearish, again, VIX bearish equals bullish. So all of these things are working for the bulls. But notice the difference here in the quality of the scores between IWM and the Qs, which we just looked at, right? We're just looking at perfect scores. In this case, you don't really have perfect scores, right? You're neutral, slightly bullish, but neutral, neutral, slightly bullish. And from the inside out, it's a completely different ball game, right? Here you're actually pretty bearish on the hourly. So the adjustment to make this actionable for you is on one end of the barbell, we're going to go into next week with a QQQ hourly squeeze, which gets me to focus on XLC as a primary component because that is the best looking tech sector that I see at the moment, XLC, communications. Inside of that would be Google and Meta and even Netflix. So I think you can kind of flip a coin between those three and see what you like. I'm going to go with Google. I think it's just the cleanest, easiest one, but I think you really can't go wrong as long as you go with XLC. The second best tech components were going to be the chips, so it's going to be the SMH, and with that would be something like NVIDIA, AMD, Avgo. I think all of these make fine plays. On the other end of the barbell is going to be IWM. And so what I'm going to do next week is have IWM as an internal on my screens and just watch it. Now, it's entirely possible that IWM could, drill lower, go sub 190, and if tech is strong enough, it won't matter. But if there's one thing that could give the market a little bit of pause next week, it is going to be this hourly IWM. And I do believe that makes it worth some real estate on your screen as a internal to watch. So I believe we went a little bit over my threshold there. I wanted to make this 5 minutes, but I also wanted to explain the rating system to you. Actually, you know what? Let's finish on a bright note here. I don't want to finish on IWM. It's offensive to the eyes. Let's finish on a bright note. So let's take something like Google here. So why would I want to trade Google? Well, it's in XLC, which is the strongest sector that I see. And equally important, when you look over here at the weekly chart, max bull with an ideal looking squeeze. That's the signal, right? We've gotten it really down to something that simple. Before, we used to have to look at the chart and say, okay, what are the moving averages doing? Are you above or below the ATR? What is your trend indicator saying? What is your thrust indicator saying? Now, all of that is just built in. So now we have it all up here, very convenient for us, and it makes our thought process completely simple, basically. Max bull plus squeeze equals buy. And so Google's going to be one of the primary things that we focus on next week. And also understand that, from what I saw, the only cautionary signal is the IWM. So just watch that one. And as long as the Mag 7 next week are relatively strong, then the IWM can do whatever it wants. In the event that the IWM is weak and the Mag 7 are flat to down, then at that point that's going to raise some caution. But at least you know what to look for on Tuesday. That's my time, guys. I hope this was helpful. Leave us a comment down below if it was helpful. Let me know if you like the scoring system. Let me know if you don't like the scoring system. Let me know if I missed something with the scoring system that you can think of that's outside of price, trend, and thrust. If you find something that I may have missed on the scoring system, I'll go out of my way to send you an autographed copy of John's book. Also, I'll put a little bit of a bounty on this one. I don't think anyone will win this because I don't think I missed anything. But then again, you don't know what you don't know. So if you can find something that I missed in building out this scoring system that is outside of price, trend, and thrust, and I agree with you, put it in the chat. And if you're correct, I'll follow up with you and we'll get you an autographed copy of Mastering the Trade by the man himself, JC. All right, guys. Thanks as always. Have a great long weekend. Find some time to relax. Remember to be a human being. We do this not so that we go to the grave with $1 million, but we do this so that we can live above ground a happy, productive life with those we care about. So do that this weekend. See you next week. Cheers.
Hey traders, this is Sam with Simpler Trading. I want to thank you for watching today's video. Hopefully you found the information in it helpful. If you did, leave us a like, leave us a comment. It really does help us out with the algorithm. And if you want to see us trade live with our own real money and be part of the community, come and check us out at simplertrading.com.